Mark Matthews of Bank Julius Baer is now joining in. Mark, thank you very much for joining in. It's the final stretch of the year. How are you feeling about global equities and what do you expect now?
Well, if I look back at the other years when the S&P returned over 15% in the first 10 months of the year, in other words, from the beginning of January to the end of October, there were 21 years like that since 1950. And 20 of them, all but one, had positive returns in the last 2 months of the year. In other words, November and December. So purely on that one technical observation, I would say that when you've had a strong year in the first 10 months, you almost always have a good finish. And of course, as you know, November and December are typically the best time of the year for the market, along with the very beginning of the year. So I think that we should end the year higher. The December Federal Reserve meeting is garnering a lot of attention. I think perhaps a little too much attention, because if they don't cut in December, we think they will definitely be cutting in the beginning of next year. But after the speech that Fed President Williams gave on Friday, committing to a cut in December, and so we can deduce from that Powell will want to cut too. And if Powell wants to cut, then Governor Cook will want to cut. And you can kind of add up all the people who will cut. A cut does look more likely. The futures market's pricing 75% chance of it. And I suppose that's the primary reason why we had the reaction we did in the market yesterday.
Absolutely, Mark. Morning. But in terms of what happens if President Trump, if he gets his way with appointing, his candidate is Fed chair in May when Powell retires, whether he'll get his way with much lower rates next year, that's also doubtful, right? As we've heard comments, the Fed members, etc., are pretty independent. They may want to cut in December more than, the greater number than those who don't. But, it doesn't look like they're all going to side with the view that rates should be a lot lower in 26. But that's another story. Just a quick word on the AI thing, Mark. We've been talking about ROI questions, etc. But there's this new thing, right? This Google Gemini, which basically topped the charts in terms of performance. Some say better than ChatGPT 4. Markets has been fixated around OpenAI and its ecosystem for where the winners will emerge from. And suddenly you've got Google, which kind of perhaps is the most complete a full-stack AI player coming up with, a great product. So does it push out expectations, all these ROI questions? It kind of makes everything much more difficult to answer at this stage, right? Who essentially will be the winner? So far, at least there was clarity that with OpenAI doing what it is doing, it is going to be OpenAI. The question was whether they're over-investing and whether they will make capital allocation mistakes, etc. But now there's this new one.
Yes. Isn't it interesting? And I must confess that I read Google totally wrong, because I was one of the first users of Gemini when they launched it. And I thought it was terrible. And so I immediately switched to another large language model. Now, of course, as you rightly say, it's top-notch, the best. And Google are making their own chips. They're monetizing AI through their many different platforms, not the least of which their own search engine, but also YouTube. And so they're looking like the winner. They are looking like the winner, and there probably will be more than one winner. But as you also pointed out, the market is worried about all the investment that's going into AI and whether it can be monetized. Some companies will lose a lot of money, the ones that are not the winners, if you know what I mean, the ones that do not end up having a big market share. But I think we can start to see the horizon, and we can start to see that Google is going to be definitely one of the big players in the AI space for forever, basically. And of course, that's very meaningful. Because this is truly one of the greatest technological innovations in our history.
there was some commentary that OpenAI, I mean, ChatGPT has about 800 million active users, and Gemini has now it has hit 650 million. So it's very swiftly caught up, as he was saying, that first it was all OpenAI as the winner.
Yeah.
But look at, Gemini's number, 650 million users.
Well, that's right. Mark, good to see you in as always. I wanted to bring us back to the Indian markets. What's the view out there? We've been relative underperformers. You're calling for a bit of a melt up towards the end of the year, as history suggests, that if we've had a good year, then normally the US markets, they end higher. What about the Indian markets? How are you feeling? And also, I wanted your call on tech. I recall a couple of interactions ago, you said that could be a contra-trade. Indian tech companies that have underperformed, going by the commentary, going by the valuations, you would take it as a contra call. Last few days, in fact, that's playing out. And for the month, actually, Indian tech companies have been relative outperformers. Your view on them?
Well, I made the observation purely on a valuation basis, and looking at the biggest losers, this theory, the dogs of the Dow, that if you buy the biggest losers at the end of a year, chances are you're going to make money out of them because they went down so much. So India's never been a value proposition, but there is definitely value in the IT space. That's why I talked about it. And for India as a whole, I'm bullish on the market. That has not changed. I think the underperformance of India this year is attributable to the foreign selling, which was to finance a rebalancing in China, where foreigners were very underweight. And that should be largely done by now. I can't believe there's anybody who owned India and hasn't sold it yet if they were going to buy China. And then there's also the issue of the lackluster earnings for the last couple of quarters. And I also think that with the monetary policy changes this year and the tax cuts, we should look forward to an improvement in earnings for fiscal year 27. And if we're looking for earnings growth on the Nifty next year of between 16 to 18%. If we're right and the Nifty's back down at what I consider to be a reasonable price-earnings ratio, then I don't see why the market can't give you about 16 to 18% next year.
So India gets back to its outperforming ways, Mark?
I don't know if 16% will be outperforming China. We'll have to see. I would also expect China to give you, I'd say, somewhere between 10 to 15% next year. One thing about China is it is a very state-sponsored bull market, and they have the capacity to control it. They don't want it to become a parabola. They want it to be a slow and steady bull market so they can coax households to invest in it. And so I don't think that it'll get much above 15%. And on that basis, yeah, probably India will outperform China next year.
State-sponsored bull market. But yeah, I mean, point taken. I think it conveys the meaning of what's happening. Temper too much and slow, steady, but a market which does well. Thanks very much, Mark. Great speaking with you. Appreciate you joining us here on CNBC TV 18.